Welcome, everybody. Steven Sitkowski here. Glad to have you for this edition of my Market Insights, where we take a look at what's going on and moving the markets. Let me go ahead and share my screen with all of you. Glad to have you with. It is the 12th of August. Lots going on here. I've got a trade that I just placed, hoping to get filled on it. It's on GE. It's a call spread where basically I am betting that GE will not drop below 157.50 in the next 18 days. It's up around 166. So, I mean, it could drop, 9 points and I'd still be okay. And as long as it stays above 157.50, my profit would be 25% in 18 days. It's kind of weird, because I think about it would take the average person 2 years to make that in the stock market. I'm looking to do that in 18 days. So I'll check that order after I get done with all of you. Quick reminder that everything we do here is for informational and educational purposes only. It is not intended as investment advice. So what to watch this week? Well, we had the monthly federal budget. That's being announced a little bit later today. Tomorrow, we've got core PPI coming out. So that is inflation at the wholesale level. So we're looking for that to come in at 0.2%. That could be a potential market mover if it's higher or lower than that figure. Wednesday, CPI numbers are coming out. We're expecting year over year to be right at 3%, same as last month. And core CPI to tick down to 3.2%. On Thursday, initial jobless claims, expecting 235,000. Then we have the Empire State Manufacturing Survey coming out. See kind of the state of the economy right now. Retail sales. That could be an interesting economic barometer. And then on Friday, we have consumer sentiment. So lots going on this week. Could definitely be moving the markets. Last week's heat map. This includes part of the day today. So definitely more green than red. It felt a lot worse than this, but the week actually ended up being not so bad. Wasn't fantastic. Big winners for the last week, NVIDIA. I was really happy I added to my position when it was in the 90s. Lilly up 15% in the last week. Meta up 8%. I'm doing covered calls on it. Apple up 4%, doing covered calls on it. Microsoft up 3%, doing covered calls on it. 1 year heat map. Big winner, no big surprise, NVIDIA, but there have been a lot of winners. Meta 58%, Alphabet 26%, Lilly 71%, Costco 58%, Walmart 29%, Microsoft 26%, Apple 22%. Been a lot of money made out there. JP Morgan 34%. Market breadth last week. Take a look at winners versus losers. More losers than winners on both the New York Stock Exchange and the NASDAQ. Look at new highs versus new lows. A bearish tint to it. 186 new highs, 280 new lows on the NYSE. NASDAQ was awful. 220 highs, 767 new lows. The big winners, a lot of them are more obscure companies. I mean, Lilly's a big one. Royal Caribbean, you all know. Constellation Energy Group was up big. NRG Energy. Axon Enterprises. Fortinet. That was kind of a comeback. Uber reported. They had a good quarter. Expedia was up. The VIX went nuts. So the VIX is a volatility index on the S&P 500 that is measured based on what people are willing to pay for put options, which is a form of protection. So it went all the way up to 65 and it's come back down now into the mid 20s. Typically it's in the, I don't know, if we were to look down here, it's around the average 14.44 is the 200-day moving average. 50-day moving average is 15. So let's call it the mid is about 15, where 25 is still pretty high. Revenue growth for the last quarter's earnings, 91% of the S&P 500 companies have reported. Pretty solid. You know, all S&P 500 companies up 5.2%. How about earnings? Up 10.8%, which is okay. These numbers are supposed to go up third and fourth quarter. Risk appetite declines. So people are getting a little more cautious. Well, of course, with all the volatility, VIX goes up, risk appetite generally goes down. Kind of a mixed message. So where are the B of A private clients investing money? Utilities, like, oh, okay, they're being defensive. Next, technology, not so defensive. Then munis, defensive. Master limited partnerships, defensive. Energy, defensive. Value, defensive. Right? But yet staples, considered one of the most offensive, is down at the bottom. So people are just looking at the momentum of the various sectors and adjusting accordingly. Markets are definitely counting on Fed cuts, so they're priced in over the next 12 months. They're looking at rates falling 2%. It's a pretty good drop. Effective rate cuts, probably shown this to you before. In a normal market, rate cuts are just fantastic. In a recession, markets still fall. So everybody's still keeping an eye on the economy for sure. Fed probabilities have shifted since I saw you last week. Still 100% probability for rate cut in September, but now it's about 50-50 between 25 basis points and 50 basis points. I think it's going to be 25. I think the Fed's going to try to ease into things unless they get some really weak economic data between now and then. If things are fairly normal, they're going to want to move at a gradual pace. They don't want to spook the market or anybody else. Market sentiment has been definitely falling. We are still above the historical level of bullishness, which is 37.5%. You know, we're at 40.5, so that's fine. But look at the bearishness. Historically, 31% bearish, 37.5%. And earnings this week, I don't think we got a whole bunch that's going to move the market, frankly. Just kind of skimming through this list. Yeah, I think it's more going to be driven by the economic data. Sector returns year to date. So the S&P is up 12.32%. So it's amazing. You know, I was talking to this young man and he said, yeah, you know, at the market crash. I said, what market crash? Oh, I heard stocks were crashing. They're still up more than double digit. We're barely more than half the way through the year. This is called a really good year. But the sectors that have beat are communications, tech, utilities. Financials are about a break even. Everything else has underperformed. The only loser in the group is consumer discretionary. Let's take a look at the charts. So we're trying to claw our way back above the 50-day moving averages. And There we go. So far, we're heading in the right direction, but we have not been successful at fully recovering that line. So we'll be keeping an eye on that. How about the Qs? NASDAQ 100 Trust, further away from that 50-day, and IWM, which was doing so well. It's supposed to do well in an election year. It's supposed to go up 16%. That's not where we're at now. And look at how, right here, what's going on. That 50-day is acting as a level of resistance. So we would need to see it break back up above that 50-day before we'd give it any consideration. So, the markets are trying to recover. We've done pretty well. We'll update this soon. So this is the track record as of the end of June. So we have closed 74 trades, the average return about 19% in about 19 days. So, that's both winners and losers. We're tracking at about 1% a day so far for the year. So it's been a fantastic year for us. Hope it's been a fantastic year for you. And I will look forward to seeing you next week. All right. Until then, be safe and be blessed. Bye for now.